Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's take a look at our open positions. We were able to get our short put vertical spread for April expiration filled yesterday, trying to get to 68. Right now, market's at 83, so we're well on our way. We have a T-bill auction today, so just ignore that. Short put on CCJ, kind of flat today. That's all right. Trying to get to 18. That's for March expiration. And the semis are on a tear today because of NVIDIA. So our short call spread on the semiconductor ETF is losing again today. But this is, again, March expiration. We've got 20-some days to go here, so we still can have a reversal there, okay? All right, let's take a look at NVIDIA first. NVDA up 15% after earnings. Not bad at all. It takes a lot of guts to do a short call spread in NVIDIA. We did one back in, when was it? Was it back in May of 23? I think so. One of these quarters back here, we did a short call spread after earnings. To do another one here, you could. Let's take a look. The move priced in was 11%, so you'll see green on the call side here. So green on the call side for sure, because it moved more so than was priced into the options market. 11%, it's up 15. So if you wanted to sell something, you need to sell the call side. Excuse me. And that's let's see, you'd have to go all the way out to the 910 or through the 925. So start sell any of those. Sell the 925 by the 930. Let's do the math on that one. Selling the 925 and buying the 930. It is somewhat illiquid just because it's a $777 stock. So the higher you go, the more illiquid these get. Let's do the math. If we're selling 925 and buying 930, 1430 minus 1367 divided by 2 divided by 500, 6.3%. That's fair. Where's 925 on the chart? 925 is right about here. And for April expiration, this seems fairly priced. I don't know if I'd want to jump in front of this one. Although it has moved up since January like crazy without much of a pullback. There you go. Too much for me on this one. I'm going to pass. Okay, moving on. Rivian. They're down today, post-earnings. Down 26%. They're actually broken down below April low. So there's no chart work we can do to see where it's going to catch support. Best we could do is 15 down to 12. 11 down to... I'd hold on this one. Put spread... You'd have to sell the 750. You get $15 for it and buy the 5. Still has some heightened volatility for the April expiration. Call side, you need to sell 15. Maybe it makes sense to sell the call side. Sell 15 and buy 17.5. Let's do the math on that one. Good liquidity. 41 minus 19 divided by 2 divided by 250. Only 4.4%. So never mind. Skip the call side. Pass on this one. Next up, Moderna mRNA. Post earnings, I believe, up 7, almost 8% here. Here's our chart. A little bit more movement up, and you can make the case for selling the call side. Excuse me. If it got up to the 200-day moving average, like at 103 or so, then sell the call side. We were a little early on that one. For April, you would need to sell the 115 and buy the 120. What's the math on that? 186 minus 125 divided by 2 divided by 500. 6% there. Okay, where's 115 on the chart? 115 is right here. For April, that seems a little close for April. Let's hold on a couple days. Actually, I'll write this one down. If over the next couple days, well, between Friday and next week, if we can get upgrades and it hits this 200-day or gets to around one resistance from back here, 101 or so, sell the call side. Have to wait and see on this one. Okay. So there's that. Next up, let's look at Wayfair post earnings. Good liquidity on this one, I know. Chart-wise, this is a hard one. You've got your ascending trend line here, and you have your descending trend line here. So we're coming to the squeeze point where it's going to pop either up or pop down, and we have no way of knowing which way it's going to go. If I had to guess, to the upside. It's a tough chart. It's gone sideways since April of 2022. Now that it's post earnings, we have lower than the 30-day average in implied volatility, so that doesn't help. Put side for April, you'd have to sell the 40, and the 40 is a little close. The 35 is too far out to sell. So if you sold 40 and bought 35, what do you get? Or you sell the 40 out. Is there a dividend on this one? No. Okay. So if you sold the 40 and bought the 35, what do you get? 127 minus 55 divided by 2 divided by 500, 7.2%. But you're getting paid for it because it's so close. That's why. Selling the 35 and buying the 30 is too far out to make it worth it. Let's do the math really quick. 55 minus 22 divided by 2 divided by 500, 3.3%. So there you go. It's not worth it. 40 on the chart. 40 is right here. And yeah, that makes sense. For April expiration, selling the 40 here is too close. Okay. Moving on to Newmont, my favorite gold mining company. Down 4% after earnings. Supports at 31. And maybe even here. If you see zooming back here from back in 2019 and 2020, you have support here at 31. You have support here at 32 where it's at, but it's already bounced once there. And we have support from back in 2018 as well. I wouldn't be opposed to selling the put side here. Let's see what we get paid. Okay, if you sold the 27.50, got some heightened volatility for April expiration, so that's good. More so than in the 30-day average. I'll go ahead and do this one. 27.50. Sorry, 27.50 is way down here. This one seems fair. All right. On the put side. So this is not going to be a put spread. It's just be a straight up put. Risking $2,750 to make it cash secured. If not, you can buy the 25 and make it a $250 spread. But I'll sleep fine at night selling puts on Newmont. If I get the shares, fine. I'll put in another portfolio. Okay, so we're going to sell one April expiration of the 27.50 put. Limit credit will go for 29. Preview this. We'll double check the ticket. Sell one April 27.50. 29 credit limit to open. We'll send that one out. We'll hang tight here. If this gets filled, what is it, 15? 29 divided by 2. Holy smokes. 29 divided by 2. 14. Sorry. So we'll set the buy to close order to at $14. Okay? Next up, Marathon MRO. This must be post earnings as well. Not much movement. Low volatility. This probably is going to be a nothing. Some of these have not moved in years, like Oxy. A viewer asked a couple weeks ago or months ago about Oxy. So it's just gone sideways since 2022. No clear direction here. So it's hard to sell the call or the put side. You've got red on the put side, a little bit green on the call side, but you have to go out and sell the 27 on the call side. I wouldn't want to do that. On the put side, you'd have to sell the 21. You get paid $27. That seems fair. Everything is still, everything is normally priced as far as volatility goes. 21 on the chart. Down here, April, that seems very fair. But for me, it's a pass. Next up, Etsy, ETSY, post earnings, big move down. Gap down 2 and continued sell off. Hit the 200 day, yesterday, day before earnings, and now gap down, bouncing down. We're gonna have to wait for sure, because we'll probably get, say what, today's the 22nd. Did we get a lot of downgrades? Let's see. Riley, lowers price target, keeps buy rating. That's interesting. Maintain at Needham. Reiterates buy. So no downgrades. We haven't got anybody like JP Morgan or Morgan Stanley. Barclays, no one. Maybe wait for tomorrow or Monday, see if we get any downgrades on this one, because it'll keep moving the stock down. If we get a couple downgrades over the next couple of days, then we can go in and look at the put side. We may be early on this one. Just because of its downward momentum on the chart, if we get some downgrades, this is going to continue downward. Don't want to jump in front yet. Liquidity's not bad. It's not great. You got red on the put side, red on the call side. Skip this one. If you sold the 85 call, hold on one second. 85 call. Where's the 85 call? Nah, pass on this one. Next up, Lucid. Also like Rivian down big today. This is a $3 stock, but the options are priced pretty high. We'll have to see. This one's a tough one too. I wouldn't want to sell the put side here. Also, you missed the call side, so this is a tough one too. Not worth it. The put side, you'd have to go out to the $1.50. You get paid $6. Call side, you'd have to sell the $4.50. You get paid $14. It's too small though. Pass on this one. Apache is next. APA. Post earnings, I believe. Got good liquidity on this one. That's good. That's always nice. Let's take a look at the rest. Good yield on this one. Trailing 12-month PE is only 6. That's not bad. If it breaks down below 29.50, we got support at right here, 28.60, and then, well, actually it's double support from back here and from back here in October 21 and December 21. So there'll be a bounce there. If not, our next support, hold on. Here. Look like the next support is down till 24.50, 25. So we're gonna sell the put side. Let's keep that in mind. You have this downward channel forming. Put side for April, you need to sell the 25. That makes sense, just because of all the numbers we just talked about. Get support at 24.50, so that's basically 25. Yeah, so interesting. I'll tell you that. Selling the 25 pays you $20. You don't really get paid for it. That's the problem. And 25 is slightly too far out. What you need is a 26 strike, and that would be perfect. You can't sell the 27.50. It's too close. So stick with the 25 if you wanted to. But it's a little far out. You're really not getting paid for it. 25 for April. It's all fairly priced. I wouldn't. This one's on the. I'm on the fence on this one. 25. Ugh. Tough. I'll put a. How about this? We'll follow up with Apache. If it gets some downgrades or breaks down below, that's what we'll do. If it breaks down below here, we'll look at the put side, okay? APA. All right, cool. Next up, DoorDash. DoorDash got I believe a downgrade today. Or maybe an upgrade? Maybe got an upgrade. Post earnings, big move down, but rallied that same day as rallying up again. Must have been an upgrade. Earnings now are until May, so we got plenty of time here. News doesn't seem to be loading, but they got an upgrade out of somebody today. Let's take a look. Call side, you'd have to sell 140 and buy 145. Let's do the math. You've got, what do you got here? You've got 198. No, sorry, 199 minus 126 divided by 2 divided by 500, 7.3%. The 140 is a little close, and there's a lot of movement to the upside. So that's why you're stepping in front of a lot of momentum to the upside. What was the strike again? 140? Yeah, 140. 140 is right here. And for April expiration, that seems awfully close. I don't know if I'd want to take that. Resistance on the upside, you've got here. Next spot is around 135 for resistance. So if it got up to 135, I'd go ahead and sell the call side. We're a little early on this one. Let's do... Hold on DoorDash, even though it is up 7% today. Do you have an ideal trade idea or setup before opening a position? Do you have an ideal trade idea or setup before opening a position? So, well, like, ideally, what am I looking for before opening a trade? Sort of like what Palo Alto was yesterday. Let's take a look. So what I'm looking, my favorite or ideal trade setup is a good company that has a big gap down, that's overpriced, and you want to sell the put side, and you know it's going to go back up in your favor. Like we did Google a while ago. We did Palo Alto yesterday. So Palo Alto, look at this one. It's a good company, a lot of upward momentum, so I'm not worried about that. That's key. You don't want downward momentum. You want upward momentum. A big gap down for a good company. It hit the 200-day perfectly yesterday. You know, almost on the nose. And it's up 4% today. That's why we're up $58 today. So this is honestly the perfect scenario. Even if things cool off and it just moves sideways, we'll still make our money. Let's look at the Google one we did. GOOGL post earnings. So here on this day, what was it? On January 31st. So Google, good upward momentum. Google's a good company. We all know that. Big gap down to the downside. Sold puts, and it moved back up. So that's another one. What else is a good one? So yeah, if you get like a company like Walmart or Coca-Cola or something like that, that's a good company. You know it's a good company, and there's a big movement to the downside. You know to sell puts, and you're going to make your money back eventually. Even if you get assigned shares of Coca-Cola, you get a dividend, you can hold on to it for retirement. You've got plenty of options to do. I'll admit, selling the call side is always harder. It's more of an adrenaline rush, but selling the put side's easy. Also, a long time ago, let's look at T-Mobile, TMUS. Let's see if I can find it. We did a T-Mobile trade one time. I think it was back here in June. This was the day. So I remember, if you were watching back in June, there was an announcement from Amazon that they were going to get into the cell phone business, right? So that day, that news wasn't priced in. Remember that. So that morning, T-Mobile was down, AT&T were down, and Verizon was down, all three of them. So if you know these are good companies and T-Mobile is the best of the telecoms, you'd want to go in and sell puts on the telecom that's the best that day, which was T-Mobile. So we sold a put that day, and it came right back. You know? This chart movement since that day back in June has gone straight up. And it turns out that Amazon changed their mind. They're not even going to get into the telecom business. So T-Mobile was down that day big for no reason at all. So you go in, sell puts, move back up. Okay? So that is the ideal trade setup I'm looking for. You know? That's why if you look, we're looking at, what were we just looking at? DoorDash. You'd have to sell the call side because of the chart and the way it looks, but hesitant to do it because you don't know how far the things can run. Same thing with Newmont. Newmont's down. I know Newmont's a good company. It's got a good dividend, so you can sell the puts on it. Same thing with CCJ. Let's look at CCJ. It's another good example. CCJ. CCJ, it's a uranium company. Good movement to the upside. We had a bad earnings report. It's down. It's leveling out. It's going to go sideways, and it hopefully will come back up over time. It's coming up to the 200-day. This 200-day is going to keep moving up in this direction. And if worse comes to worse, say we head into recession, CCJ is going to go down. I know that. So if I get assigned 100 shares at the price of 40 with a dividend, I just put into another portfolio and wait it out. Okay? That's no problem. It's what you want to be careful. Like we looked at Teladoc yesterday, TDOC. Teladoc Had a bad day yesterday. It's having another bad day today. I don't want to sell puts on this. If I'm going to, it'll be a put spread. Just because we talked about yesterday, you have downward momentum in the chart. I don't know for sure, but it looks like it's on the track to bankruptcy. So if I get assigned shares, 100 shares at $14, that's $1,400 I'm sitting on, which could be all the way till bankruptcy. So, of course, I don't know. No one knows. Coca-Cola could go out of business. Not likely. But you got to be logical about things. What makes sense, what doesn't. Teladoc selling puts doesn't make sense right now. Will it get a bounce, say around, 10 or so? It had this big movement down, but got a bounce at 15. And 15 moved all the way up to 21. It's on another trend downward. Where it's going to get a bounce, I have no idea. So that's the difference. That's the ideal trade setup. Good company with upward momentum that has a big downward movement for whatever reason. It could be earnings. It could be bad news. And sell puts on it and eventually move back up. Okay? Good question, Lacey. Thank you so much for asking. Let's get back to next up, Royal Caribbean, RCL. Up 8%. I don't know if this is earnings. Maybe an upgrade. Yeah, we're past earnings. Earnings were on February 1st. Next earnings aren't until May 2nd. Royal Caribbean tapping the high yield bond market. It's not really news. Debt refinancing. Okay. So that's what it was. Launches an offering of $1 billion in bonds due in 2032. Huh. Okay, let's take a look. Here's our chart up on the news. Same thing like I just said, good upward momentum. So I don't know if I want to sell the call side here. You'd have to wait to a new high. Higher than normal implied volatility. Okay, so that's good for prices. Call side, you'd have to sell the 140 and buy the 145. Liquidity's okay in this one. It's not the best. These spreads are a little wide. Very low volume, that's why. Put side, same thing. The spreads are too wide. Let's skip this one. Keurig Dr. Pepper, KDP. Don't talk about that one very often. Down 4%. Must be post-earnings. Yep, today before the open. Hold on this one. No clear direction to the upside or the downside. Steve, random question. I was watching your Tuesday show. Why did the large CC trade bug you? Oh, because I jumped in too early. Keurig Dr. Pepper's a nothing burger. Let's go back to CCJ. So, I made the trade the day of earnings on February 8th here. And that's fine. So I sold the 40, which is moved towards fairly quickly. So someone on, I think it was either, you said Thursday, right? Tuesday. Today's Thursday. The 20th, right? So on the 20th, this day, someone probably institutionally, this wasn't a retail person, because to sell those kind of volumes, you need a lot of capital to do that. So it's obviously an institutional person, and they are way smarter than all of us combined. And that's why I was upset, because it was a really smart thing to do. They waited it out for like the perfect time and sold a ton of puts, got a ton of credit, and made a better trade than I did. So if you sold puts here, you may have been out of it this morning. And if it was March expiration, just because of the when they sold it and how far it moved up today, they may actually be out of their trade already. They made a lot of money too. It was either what was it 15,000 or 20,000 contracts? And even if they're still not out of it, we should get some upward movement eventually here. And like them, if they get assigned their shares, they'll just put into another portfolio managed by another director. Smart. Again, when we're opening positions, we're retail traders. So if we're opening, like look at the 39 strike today, 26 contracts. These are all retail people. If you see something like 15,000 contracts sold on the put side, let's do the math. Actually, I'm curious. I know you said okay, but I want to do the math. If you sold 15,000 times 3,700, you need $55 million to make a cash secured. None of us have $55 million to make a cash secured, so we know it's an institutional person making that trade. Like at Goldman or JP Morgan, someone's got 55 million backing that trade, so they can sell, what did I put, 15,000 contracts and not sweat it out. You know, for us, if we lose $1,000, that could hurt the bank account. Okay, so let's say they sold 15,000 and got $81. 15,000 times 81. If they hold till expiration, that trader will make $1.2 million by selling those puts. Okay? So we're trying to make $30. They're making $1.2 million. Okay? So I hope that makes sense. It was a good trade on their part. Next up, so we got Newmont open. Let's look at Twilio. TWLO. Red on both sides. No movement today. I think this one's going to come off the list. Yeah, I know. I wish I could make $1.2 million a trade. I wouldn't be doing this then. I'd be sitting on a beach somewhere. Hi. So still down after earnings. 1, 2, 3, 4. This could be leveling off. It could catch a bounce around 51 for selling the put side. Not there yet. Needs to get to 51 to sell the put side. Today you'd have to sell the 47. That makes sense. You get paid $54. You can make the spread at 45. So sell 47, buy 45. We just need more movement downward on this one. Keep holding on this one. We'll keep checking in with this one. If it moves down again over the next couple days, say down to 51, then we'll go ahead and we'll sell it. Okay? Next up, the Russell, IWM. Waiting for 210, not there today. Moving on right away. Roku, following up. Are they down? They're down again. 4 days in a row. I think we tried opening a put spread when it was at 66 here on the 20th. Should catch a bounce soon. Got support here at 57. Got support here at 59. If there's going to be a bounce, it'll be right here at 59 and change, right here. Let's just call it 60 even. We could be close on this one. It's at 63 right now. Today, if you sold the 50 and bought the 45, let's do the maths there. 102 minus 44 divided by 2 divided by 500. 5.8. Man, this is tempting. Lower than normal volatility, so that's not in our favor. If I had to make the trade today, I'd sell the 50, buy the 45. 50 is down here. For April, that seems fair. It's not that great of a deal. But wait till I get down to 60. So I'll put in my notes, Roku at 60. That's when we'll go ahead and sell the put side. 60. Okay, very close. Alcoa is next, waiting for the 25 AA. Not there yet. Son of a biscuit. Hold on this one. That's it for my list for today. What time are we? I got a couple minutes here. Why don't we do the first page of our IV rank scanner? Sort by volume. The spies and the Qs are off the list now, so we're not going to look at those. NVIDIA, we looked at. Rivian, we did. Palantir, we're not going to get back into Palantir yet. Intel, no. SMC, all these semis are just moving because of NVIDIA. Now that NVIDIA's quarter's over, this volatility should cool off. That's what they're all waiting for. ARM, up 10%. Let's take a look at ARM. Interesting. If you miss the call side, maybe you get a second shot to come in and sell the call side. Ooh, what a mess. All right, so we've got heightened volatility at the April strike. Good. Call side, we need to sell anywhere from the 185 all the way out to the 210. That's the problem with this one. It's just too illiquid. Put side, I'd stay away. But if you wanted to, you'd have to sell the 77.50, and same thing, too illiquid. Skip. Lucid Marathon, no, no, no. The SMH, bad. Palo Alto, we're doing fine on that one. HYG, we looked at that one yesterday. They're up. Let's take a look. Make the case for some on the call side here. No. Never mind. You'd have to sell the 79. No volume, no liquidity. Put side, you'd have to sell the 75. Pass. Okay. Next up, a couple more, then we'll call it for today. Micron, same thing, semis. Block, earnings are today after the close, so we'll follow up with Square tomorrow. American will pass. Robinhood, the K-Web. Novavax, the 28th before the open. We're too close. GDX, no, not right now. XBI, nope. Moderna, we already looked at. We'll follow up, see if they get some upgrades. Boeing hasn't moved much. We'll stay away. Pfizer will skip. FXI, no. Applied Materials on May. March 4th event, the Morgan Stanley Technology Media and Telecom Conference. A fireside chat. Wells Fargo, we've got bank earnings coming up in 2 months. We got time. Adobe's too big. CrowdStrike, AI, Riot, AMC, Avago, Carvana. Today after the close, great. We'll follow up tomorrow. Sunrun, no. United. Wonder why the airlines are on this list. Wayfair we already looked at. Newmont. I hope Newmont's gets filled. Delta, Riley, ARC. They're having a good day. Eli Lilly's too big. Goldman Sachs. I wonder why the banks are on this list. Snowflake. Couple more, then we will call it. Verizon, no. Let's take a look at VRT. We looked at that one a couple days ago. Post earnings now. What, a day or so? Pass on this one. If you wanted to sell puts, you had to have done it yesterday at open. Move's been made. KRE? Nope. Nike. December, January, February, March. Nike must have earnings coming up. We'll skip them. GameStop. Oracle. Let's look at Oracle. ORCL. Newmont got filled. Oracle, what a mess. What a mess of a chart. This is a headache. We're pass on Oracle. Pass. Newmont, let's hit the buy to close order. So we're going to click on the, we'll click on close. So we're going to do the opposite of what we just did. We're going to buy one April 27.50 put, limit of, what do we get filled at? 29.14. So change this to 14. We're going to set the duration as good till canceled. Okay. We'll preview this and double check the ticket. We're going to buy one April 27.50 put, limit 14, good till canceled to close the position. Let's go ahead and we'll send that one out. It'll hang tight here with the rest of them. Cool. Oracle, pass on this one. Back to the list. New York Community Bank. Nope. CRISPR. CRSP. Let's take a look. %6 up. Resistance is at 95.30. We're not there yet. Hold on this one. Not yet. IBM. 2 months till earnings. Pass. Chewy. Did we already have Chewy earnings? CHWY. Earnings are March 20th. It's about a month away. We're a little too close. Just a slow bleed downward. And it's at an all-time low, so there's no chart work we can do. Pass. Zscaler. On the 29th, we'll follow up next week. Barrick Gold. Stick to Newmont. Costco's too big. Target. On the 5th, we'll wait for that one. Teladoc, we already looked at. Enphase is a no. Norwegian. 27th. That's next week. GE Zoom on the 26th. Got some good earnings next week. That'll be fun. Salesforce is next week. Novo. Let's take a look at Novo. NVO. On a tear. Like Eli Lilly, this thing's moved from 48 to 123. It's a straight shoot up. If after earnings we can get a big drop down to say 103, go ahead and sell the put side, but not right now. When are earnings? Oh shit. Sorry. Oh snap. Earnings aren't till May. Not selling the call side on this one. That's crazy. You get paid for it though. If you sold the 135 and bought the 140, let's do the math. 181 minus 109 divided by 2 divided by 500. Yeah, 7.2%. I don't want to step in front of that one. Put side, you'd have to sell the 110. You get paid 110. This is fairly priced. The 110 is right here, though. For April expiration, that's too close. We have to have a bigger sell-off to sell the put side. Why don't we call it for today? It's 8 o'clock. Let's get on with our lives. Go to work. Good. So good day. We got Newmont, a short put filled there. Palo Alto's looking good. CCJ is fine. The semi ETF, we're going to have some work to do on that one. But don't worry, we got some time till March expiration. Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trained to tune in as well. Like, subscribe, all that good stuff. Have a happy Thursday. We'll see you all tomorrow.